Hello everybody. In this video I'm going to be getting into a brief look at the differences between a stock and a bond. So a stock is an investment in a publicly traded company. An investor is having a direct effect on the stock price. So the market as a whole determines the stock price. If bad news comes out about a company, say significant news, for example, a bad CEO change that the market really doesn't like, then the stock may plummet. On the flip side of that, if a company is coming out with an amazing new product, the company could also skyrocket. And this little chart right here is just giving a really brief overview. I know it's outdated. It's from 2014, I believe. It's giving a brief overview of the volatility differences between a stock and a bond. You can see that the bonds go up over time without much change, and then stocks as a whole in the market go up and down with time. In general, you have a lot more options and say in stocks than you would in options. And what I mean by that is you might have voting rights. And you can also invest in different types of stocks. There's growth stocks, which are basically betting on a company growing a lot over time. And you could eventually double, triple, even quadruple your money in just a couple of years if you buy a really good growth stock. And then there's also dividend stocks, which may be a stagnant company not growing too much anymore, but they may pay you a quarterly or even monthly dividend, which is a percentage of the money that you have invested in the stock. And then you could either reinvest that in the company or just take that cash and run. Most people have probably heard of a bond, they just don't know exactly what it is. And what it is debt issued by a company with a promise to pay back with interest. So for example, a company may issue a 1-year bond at 5%, costing $100. And then what that is you'd invest $100 in the company. And then 1 year from that issue date, you would receive $105 from the company. Most people do not invest in bonds compared to the amount of people on the stock market, just because of the low return rate that you get compared to the possible doubling, tripling, quadrupling amount of money you could do in a good growth stock on the stock market. There is low volatility and it's very safe, but most people just don't do it because the payoff's not quite worth it for them. This video is just giving a very brief look at stocks and bonds. If you do have a more detailed question, please do leave a comment down below and I will be sure to get back to you. If you did enjoy this video, leave it a like and subscribe for more educational videos about stocks in the future. Have a great rest of your day. Thank you.